Welcome to the Deep Dive. Today we're tackling a big one. The anticipation around Jerome Powell's FOMC meeting. That's May 7th, 2025.
That's right. Lots of eyes on that.
Yeah. And you've shown interest in, understanding the economic pressures right now. So we thought we'd get some perspective by looking back a bit.
Exactly. We're going to dive into Liaquat Ahamed's Lords of Finance. It's a book Janet Yellen actually recommends, which is interesting.
Oh, okay. Lords of Finance. What's the core idea there?
Well, it looks at central bankers back in the 1920s, and it argues that their decisions, especially sticking rigidly to the gold standard, kind of helped pave the way for the Great Depression.
Right, the gold standard. So currency's backed directly by gold.
And the book suggests that history holds some lessons for, well, the high-stakes decisions the Fed faces right now in 2025.
Okay, so connecting that history to Powell today, how does sticking to gold back then relate to, say, fighting inflation now?
The key thing was the inflexibility. It meant central bankers felt they had to defend the gold link, even if their economies were, frankly, sputtering.
Leading to tight money policies.
Exactly, policies that choked off growth. Now, fast forward to 2025. We don't have a gold standard, obviously, but there's a similar sort of pressure, maybe, to rigidly combat inflation.
And the talk is about potential rate hikes.
Yeah, something like 60% of economists are predicting a hike, trying to get a handle on this 3.5% inflation rate we're seeing.
And the worry, I guess, pulling that lesson from the 20s is that hitting the brakes too hard could hurt growth.
Precisely. Just like being tied to gold might have forced overly tight money back then, the concern now is, will hiking rates aggressively slow the economy down too much?
Are people feeling that concern?
It seems so. We're seeing chatter. Like maybe 70% of users on X hypothetically worried about mortgages. Higher rates mean higher borrowing costs, right?
Yeah. Affects everyone.
And look at the markets. That 2% dip we saw on May 6th, it shows how sensitive things are, how volatile. The uncertainty is real.
So it really is this delicate balancing act for the Fed. Control inflation, but don't kill the economy. Lords of Finance really drives that home.
Absolutely. It underscores just how critical that balance is. Juggling those competing demands, inflation versus growth, it's classic central banking.
So Powell's comments on things like unemployment, what is it now, 4.2%?
Yeah, 4.2%. His comments on that and maybe potential trade risks, too, will be really telling. How is he weighing those factors in this economy?
And the Janet Yellen connection, her recommending the book, that feels significant, given her own time navigating tricky economic waters.
It really does. It sort of emphasizes the value she places on historical insight for today's problems. Needing a cautious, well-informed approach, especially when things feel uncertain, like her 2015 speech hinted at, too, dealing with complex situations.
Okay, and this all ties back, for you listening, to interests you flagged before. We've looked at economic themes, societal trends. This gives that historical angle on a major current event.
Yeah, it's fascinating. History doesn't repeat, not exactly, but you definitely see echoes, the pressures, the potential mistakes. They offer valuable perspectives on the challenges the FOMC is grappling with right now.
It's quite striking, really. As we wait for this FOMC meeting, you see how these fundamental challenges, inflation versus growth, just persist across different eras.
Which leaves a final thought, perhaps, for you. As you watch the news unfold after May 7th, think about these echoes from the 1920s. How might those lessons from Lords of Finance help you interpret what the Fed does and what it might mean?
Understanding the long game, perhaps. Thanks for joining us on The Deep Dive.